Welcome everyone to Park Launch's Fireside Webinar Series. For those new to this webinar, please join us at parklaunch.com or subscribe to our YouTube channel to stay updated to our activities promoting Pakistani entrepreneurs and startups. We'll be hosting questions and answers during this fireside chat as well, so please do use the chat function to send in your questions. I'm your host, Jaleed Khwaja from Rock Ventures, and we have an esteemed panel of guest speakers today who have observed entrepreneurs closely around the world. Our topic today is the Pakistani startup ecosystem. We have Ahmad Jalal, who's a founder and CEO of Cordoba Ventures, Ovais N, who is a partner at Rise Capital and a guest lecturer at London Business School, and Omar Shah, who is the CEO and co-founder of COLABS and a fellow graduate of Warwick University. So, gentlemen, welcome to this humble fireside chat. Let's hear your stories. Tell us how you got to where you are in your careers, the experiences that you've had, and you guys bring in a little bit of the investor side as well as working very closely together with entrepreneurs in Pakistan and around the world. So let's hear your thoughts about that as well. So, Ovais, would you like to give us a couple of words about yourself?
Thank you. Great. Thank you for having us and for having me also. I guess I got involved, well, in the ecosystem in the MENA region in about 2010. And the reason for that was that I joined Abraaj in 2008, but I actually joined on the operating side. I joined at K Electric in Karachi and spent 2 years as part of the leadership team there, and then came back into the Dubai functions. And at the time, if you remember, President Obama had kicked off a whole program around, MENA entrepreneurship as a major piece of, foreign policy architecture and job creation, Kaufman and all that thesis. So, we were quite closely involved in all of that and set up a fund, which is in fact how I met Ahmad Jalal, who's also on the panel, was that we set up a fund called Riyadh Enterprise Development. And then effectively as a subset of that, we set up a platform called WAMDA. And WAMDA initially started out as a content collaboration vision centered around how do we build almost a common frequency of access to knowledge, expertise, and the ability of founders to connect irrespective of wherever they were, whether they were in Damascus or in fact in Karachi or Riyadh or so forth. So I think the interesting thing at that time, one observation that I think will come out later, was the mapping of where we saw the ecosystem evolving in the region and where it actually ended up evolving. It was completely different. We figured everything would happen in the UAE, everything would happen in Lebanon and Jordan because of the talent level. And instead, everything's happened in Egypt and Saudi Arabia, and continues to be the case in the UAE by virtue of, the infrastructure, that there's a big facilitator for entrepreneurship here. So did that, and then invested in a number of companies, frankly, most of which failed. We'll get to that in a second as well, because some good learnings there. One success story, which was The Entertainer, which Ahmad Jalal and I were both involved in at the beginning as well. And then subsequent to that, we figured as a private equity fund, there is some mileage in the idea of doing tech. And we kind of we did the deal first, as usual in reverse order, did the deal first and then worked out the strategy, which is not ideal, but it seemed to have worked out quite well because the first thing we did was Careem. And alongside that, we did Hepsiburada in Turkey, and one turned out to be a $3 billion unicorn. The other one ended up being a $3.4 billion IPO about 2 weeks ago, which is Hepsiburada on the New York stock market. I think there was some good due diligence and some good structuring of the theses around those two investments, but a good bit of luck as well, to be honest, because I think Careem, was an opportunity that we saw as being either likely to be highly successful, or Uber's firepower at the time would have created an existential issue for that company for sure. But we bet essentially on the management team. So where we did put all of our chips, Mag had the capability to take on Uber and win, which proved to be the. Anyway, so we took all of that and then figured let's build a fund thesis around it. So we created a new economy task force. That's how I ended up interacting with Omar Shah, who's also on the call. And then we built out a thesis around investing in tech. Anyway, what happened, as we know, long story and quite well recognized now, but anyway. And then I ended up joining a fund called Rise Capital. Rise is an emerging markets early stage investor founded in 2014 by a former Goldman investor called Nazar Yassin, who then left Goldman, joined Tiger Global, had done a number of investments in emerging markets and Russia, and wanted to go earlier stage. So I came on board to look after the EMEA region broadly, but specifically GCC and MENA. And we've ended, long story short, we've ended up doing 3 interesting deals, I think, in the MENA region. One is Kitopi, which we did at the end of 2019. One is HomeSmart, which is an online furniture furnishings business in Egypt, looking to expand regionally. Interesting space because I guess the opportunity there is an enormous. Then third is Maxab, which is a B2B commerce play in Egypt, which we believe has been wider in the region. So that's a bit of a summary, and I've ended up through a series of accidents, good fortune, and a little bit of calculation. Ended up doing some interesting stuff. But as ever in life, most of it ends up being either luck or fortunate enough to meet the right people.
Fantastic. I mean, there are quite a few things that you mentioned over there, which I'll come back to later as we go in through the agenda. So Ahmed, over to you. Tell us a little bit about your story, and then we'll hear Omar's story. I think all 3 of you share a little bit of common history as well.
Yes, and quite a few coincidences in the midst. So I was like a Pakistani in England. I did the traditional route, became a chartered accountant from England, and then I ended up at Goldman Sachs. 5 years I worked there. And then come on 16th October 2008, when Lehman went down, I was on the trading floor on fixed income, currency and commodities. And I have a scene of walking through the trading floor, and there was absolute chaos and commotion on both sides. As you know, the Goldman trading floor is huge array of computers and people shouting at each other. But in the midst of it, there was a kind of a calm, and there was a moment of zen. And in that moment, I asked this question: is it as good as it gets? And it was something that came from within, because of course, when you're working at Goldman Sachs, and I had become the executive director that year, you think you are the master of the universe, and you have arrived. And then you realize that everything is crumbling down, and you realize that the Citigroup stock price is at $2 a share, and that Morgan Stanley is $5. And the moment your stock price goes below your book value, you know that you're toast, you're almost toast. So it makes you quite vulnerable. It makes you quite humble, and it makes you question your assumptions. So it was kind of that, and in that scenario of the financial crisis, that kind of humility somehow I got me to ask that question: that is Goldman, or is what I'm doing, as good as it gets? And of course, the answer came that yes, it is, but there's so much more out there to do, and something that can have more impact, and something that would really create value. And the work that I was doing at Goldman was very complicated. It was a structuring desk, but it was getting me away from Pakistan, and getting me away from what I could do in Pakistan. So I thought, okay, we bankers have done a real bit of damage. Let's try to figure out how we can solve the problems rather than create them, and come up with some kind of my own thesis of development. I have come from Pakistan, and of course, what happens in Pakistan is of immense importance to me. And that took me to the Harvard Kennedy School, of course, School of Public Policy, where I was enrolled in a 2-year program. And whilst I was doing that, I came across this lady called Anne Habibi, who's a Lebanese American entrepreneur, and she was starting something called Arabia 500, which was a startup 500 entities in Pakistan, across Arabia. And I said, look, I really don't know Pakistan, because I have been out of the country for 10, 12 years, but I'll help you start the Pakistan 25 in the Pakistan work. I was not very hopeful of it. I and my friend, we started Turkey and Pakistan 25 altogether. As it happens, Anne Habibi was in Lebanon, and she came across a guy called Ovais N in a forum in Lebanon on some kind of an ecosystem startup. And she said, you know what, there is a Pakistani guy that I know who looks very much like you and has similar kind of energy level as you. And I don't know whether it was a compliment or a takedown of either of us. But nonetheless, what happened was that, and this is actually a true story, because we had never connected before, she connected us together. Ovais and myself, and Ovais said, and I was, I had lived in London for a long time and I wanted to experience real Middle East, and Dubai was not really Middle East for me. So I ended up, I said, I want to go and work in either Palestine or Jordan or Lebanon. So I ended up working in Jordan over there in a company called Riyadh Enterprise Development. But then as it turned out, the Riyadh was acquired by Abraaj. And lo and behold, the person on the other side was Ovais N, and he contacted me. He said, what are you planning to do? I said, I plan to be in the Middle East in the summer. He said, okay, I've got a project for you. It's warmed up and it's going to be set up. And I want someone, entrepreneurial to be on ground. And that's where Ovais and I connected. And I was literally on ground in Amman for about 8-9 weeks. So fantastic time. And there was Ovais, there was myself, one American lady called Nina Curley, and 2-3 other guys, mostly Jordanians, who helped set up the back end of Wanda. Of course, a lot of the front end of it, of the thinking strategy was happening in Dubai, but the back end was set up over there. And that kind of infused in me the feeling, the thinking that entrepreneurship is the way forward. So once I graduated from Kennedy School, I had the chance to join Riyadh Enterprise Development, the SME fund. And as a result of that, because I was very passionate about, I have also gone on an ideological development journey, evolution in that period. And I believe that, the solution of countries' problems rests in individuals. And that is entrepreneurs. And if you have, instead of 100 entrepreneurs, 1,000 entrepreneurs, those countries can grow. That quickly took me to Pakistan, back to Pakistan. So I came to Dubai, and we had the opportunity to launch a fund, which was $93 million Pakistan Growth Capital Fund. And it was, we raised it, an SME fund, but we had a lot of challenges. We had a lot of challenges with deployment of that fund. So I got a lot of experience that why deployment of capital, particularly sizable pool of capital. And we want to talk about how excess capital can be an issue in Pakistan. So I had a lot of experience in difficulty and challenges of doing that. And then lo and behold, what happened was that I had an opportunity for a transformation, restructuring role, which happened in an organization called the Aman Foundation and the Aman Health, which was a very hands-on operational role. From, let's say, managing 10 people maximum, I went on to managing 1,800 people. And it was like people from Ivy League schools to PCF schools, people from across the board. And it was quite a challenging role, but I did that over 3 years. So I had a journey that took me from investment banking to private equity to investing and into line management, actually running and being an operator on the ground. So when I was looking to do the next thing, I ended up starting something called Cordoba Ventures. And the idea behind Cordoba Ventures was that, can you see the screen?
You can. But I also want to give Omar a little bit of a chance to introduce himself, and maybe we come back to the slides after that.
I'll just introduce a slide because it fits into the story, into what I'm doing, and I think it'll wrap up the thing.
Fantastic.
So the thing about Cordoba Ventures is that so I looked at it and I thought, Pakistan may have, capital is not the issue. The issue is entrepreneurial, or what I call an operator talent. That is the lack of it. And that's why deployability becomes a big issue. So Cordoba Ventures is something that I've started. It's a venture builder. It works in the area of healthcare. We're building consistent quality healthcare platforms. And one of the first projects that I have launched is what I call Cordoba Care Institute of Health Management. And our mission is to upgrade and scale good quality nursing talent, allied healthcare professionals across Pakistan through creating standardized training institutes all across Pakistan. And that's my way of saying, how do you combine commercial success, but also have large scale systematic impact? And so that's the first project, because we're not a fund per se, we're an entrepreneurial company, and we seed our own businesses, first of which is the Cordoba Care Institute of Health Management. So it comes down the whole arc in terms of my travel from London to US, to Dubai, and back into Karachi.
Fantastic. I think this is super interesting. I think it also adds to some of the points we want to cover later on. So Omar, tell us a little bit about yourself, from your academic starts at Warwick to your interaction with the two gentlemen on the call, and then where you are right now at COLABS, working a lot, hand in hand with a lot of the entrepreneurs that we see in the Pakistani ecosystem.
Sure, thanks. Also, I apologize. I'm up north in the mountains, so my internet connection is sort of woozy. So if I do get stuck, let me know. But I think I have it covered. So I studied. I went to Warwick, did my business over there. Then I studied economic development at SOAS. Post that, I basically started off in equity research and trading with Adi Free Khwaja, which is on sort of K-Trade. That was my sort of first role in investment banking. I was quite, and in that as well, at the time, I really wanted to get into venture capital. There used to be a firm called ePlanet, run by a Pakistani gentleman, Asad. And at the time, I'd interacted with Ovais, Ahmed, Arif, all the guys, sort of Abraaj, and these guys were looking to set up the Pakistan fund. So behold, after spending 7-8 years in London, I ended up in Dubai. Also a core part of the team, sort of as an analyst. And I spent the next sort of 7-8 years in different roles in investing, then based on Mexico, Turkey, back in Dubai. I spent a lot of time with Ovais as well as Ahmed. We had come up with sort of the new technology task force. At the time, we were looking to basically open our sort of accelerator VC in Pakistan. I remember at the time, used to just be Plan 9, and the idea of sort of VC, which is sort of coming out there. I think 2016, December was when I invested as an angel in Patari, where I still sit on the board with Rabi and Samayakar. Come forward, Abraaj sort of went to liquidation. I was very, very involved. I think end of 2018, I really wanted to move back to Pakistan. I really want to sort of give back. And after spending sort of 10, 11 years abroad, I also come from an old family in Pakistan. I come from the Allama Iqbal family. So I have very, very close to my heart and very, very patriotic. And always working with these guys to bring people into the country and seeing how that goes forward. That's when I sort of realized and sort of set up what today is COLABS. And along with sort of COLABS in the last sort of 2 years, today we manage about 700, 800 clients across multiple facilities. The idea is to open these physical sites all across the country. Most recently, we just hired the whole team from the National Incubation Center of Lahore to build out our sort of accelerator initiative, which is CoGrow, which is basically around interacting with the same companies that sit hand in hand in Pakistan and working with sort of international partners like sort of Ali Faha, Venture for Pakistan, anyone wanting to come into the country, because we have these physical spaces, and this is what we're trying to sort of build out. I also invest as an angel in a few companies. I'm in K-Trade, I'm at Patari, I'm recently doing another one. So the idea is that anyone wanting to come into the ecosystem, the market, the only way the ecosystem can grow today is if we all do it together. So I have a very core fundamental belief. And this is what I've been doing the last 2-3 years. And back to you guys.
Fantastic. So I think all three of you have had some time spent in the GCC region, working either with early businesses, let's say, or startups. How do you see the evolution of the startup ecosystem in Pakistan in comparison to how it evolved in the GCC and MENA region, especially in the first half of the last decade, right?
If you don't mind, guys, I'm happy to kick off and feel free to jump in. I'll just give a couple of observations. I mean, first of all, there are two aspects to it. One is there's a little bit of hockey stick in Pakistan, I feel, where there was a very slow burn of a number of evangelists who were active in Pakistan and active in championing Pakistan, and to a large extent internationally, probably banging their heads against a wall. And I say that with no disrespect, because I think those of us who certainly worked in a Pakistani-centric platform as we did would always get funny looks when we said, and we're going to do stuff in Pakistan as well, including from MENA investors, limited partners, and so on, who generally saw Pakistan as, okay, a large addressable market in many ways, but low disposable income, macroeconomically challenged, politically challenged, lots of scary stories, lots of headlines. Yes, a powerful diaspora. I don't see too much evidence of people coming back. And generally speaking, let's wait on the sidelines until things stabilize. And in parallel to that, you had a whole bunch of people who were just doing exactly the right thing, which is actually doing stuff and ignoring all of that. So you had that kind of a hockey stick effect resulting in an enormous acceleration in the last 12, 18 months, which is now the very same people going, let's wait on the sidelines, going, hey, let's do more in Pakistan, which is fine and great, because it's not about moralizing, it's about pulling everybody together. And if people want to sit on the fence for a long time and then get involved, that's their prerogative. And then you've got MENA, which in a similar fashion, when we began in 2009-10, in a sense with that Obama thing as a kickoff, really. I mean, yes, there was stuff happening before that, and Khaldun Tabaza and, Ahmed Humaid and, the guys at Sami, Tukan, and there are lots of people who've done Maktub and so on, but these were very much outlier type situations. And then the same thing happened there, as I said earlier. We figured everything that happened in Lebanon and Jordan, that's where the talent is, and the UAE is a great infrastructure. And instead, kind of Egypt out of nowhere literally took off. Saudi Arabia got a massive jump start as a result of public and private commitment to the ecosystem. The UAE, with the Careem success story, I think the alumni network established by Careem is a major driver, because both in the MENA region and in Pakistan, you see an enormous chunk of startups which are Careem alumni. And you can add to that, even Swivel and even Noon or Amazon or Jabbar Internet Group and so on. Get a lot of alumni from those systems becoming part of the startup scene.
So just to pick on that point, do you think it was Egypt and Saudi Arabia coming out as the innovation hubs, so to say, in the GCC or MENA region? Do you think that's more a factor of the population size that's in there, and it was just a matter of time that something's going to come out of these countries? Or were there really some public policies which were implemented in these countries which encouraged entrepreneurship and got more and more people involved in this area?
Yeah, I mean, I think the public policy generally lags. Saudi Arabia is slightly different, because I think there's a top-down drive through the PIF, through JADA, which is their fund of funds, through, Munshat, which was their SME authority, to deploy actually enormous amounts of capital into the ecosystem and to give it a jump start. So I think the Saudi case is different to the Egyptian case. The Egyptian case is just raw entrepreneurial talent with very similar dynamics to Pakistan in terms of a strong Egyptian diaspora in North America, a big addressable market with a large population, big urban centers like Cairo, a decent infrastructure in terms of engineering capability. And it's always been an addressable market post-Careem. So I think it kind of took off. And don't forget, there are players there like, Ahmed Al-Alfi and Flat Six, who, to his credit, Sawari Ventures, he's been doing stuff literally for 12 or 13 years, coming back from the US in the 2000s to do stuff. So you've got a lot of Egyptians who were committed way back, and Al-Alfi has got to be recognized because he's done an amazing job, actually. So Egypt is one example which I think has a distinct Pakistani parallel. But Saudi, I think, is, to be honest, more of a case of always within the GCC being the addressable market, but an enormous amount of public sector capital coming in.
So Omar and Ahmed, so you guys being in Pakistan, and Omar, you having set up the co-working space, do you see some kind of trends emerging in the co-working spaces where a certain type of or certain types of startups are more on vogue, let's say, whereas there's missed opportunities on the other side, whether it be tech or whether it be something else?
Yeah, so I mean, one thing which is very interesting is if you look at the Pakistani market back in 2016, before the national incubation centers were set up, you only had sort of Plan 9, very, very early stage, nascent sort of incubators. with the Ignite fund taking sort of 0.5% from the telcos and bidding out all these NICs from Lahore, Islamabad, Karachi, Quetta, Peshawar, one thing that really sort of pushed it was that sort of drive to have that entrepreneurship, and lots of these companies such as BookMe, all of them sort of are the ones that sort of came out of these incubators. Something which is very, very interesting I've seen in the last 2 years is today, sort of at COLABS, I think I have about 100 companies that sit across my facilities. Majority of them, if I was to say that 15 or 20 of them have raised capital between, let's say, 300,000-400,000 up to $8 or $10 million are on the sort of the Series A route. It is actually Pakistani diaspora, ex-investment banking, ex sort of larger unicorns out of the US, the Middle East, wanting to move back and set up from scratch. They're actually bypassing the incubator or the accelerator route, which is very, very interesting. So like, I mean, if you recently look at sort of the fintech such as Tag, Sada Pay, sort of Abhi, all these guys coming out of there, they are sort of more experienced founders who are directly engaged with the investors. So sort of that is a sort of trend you see as well. For example, a similar sort of Dajir as well, and all the other guys coming out of there. So that's something that is quite interesting. And one thing is that you have these incubators and the accelerators stay in the market, but at the same time, the sort of companies today that are going towards sort of the Series A and sort of growing, there are more mature founders that are coming back. It's sort of that Pakistani, sort of Rabi or Atif puts it, right? It's basically Pakistanis who like Ovais or Ahmed, like yourself, who have wanted to move back. They are backed by investors and they are coming with ideas or sort of a proper sort of driven play, such as sort of usually Trella and all of these sort of companies coming in. So that is sort of one trend, which is quite interesting to see that was not there sort of a few years ago. And the same thing with the emergence of also of the recent sort of VC funds coming in as well. They are the local companies today raising capital. They are looking for more international VCs as opposed to the 3 or 4 ones in MENA or Pakistan before. And you see more names coming into the country today. That's something very interesting that I see.
It's a very interesting point that you mentioned over there on the Pakistani part. And Ahmed, I think you briefly alluded to the operating lack of operating know-how currently in Pakistan. So do you think that the guys who are coming back, they also suffer from that? They maybe have a disconnect with the local market. They've been outside of Pakistan for way too long and they're trying to copy paste an existing model from somewhere else. Do you think that's a space that founders need to work on? You're still on mute, so unmute yourself before you.
Okay, great. So my view is that in Pakistan, what has happened for the last 12 to 18 months is a sheer catch-up. I mean, it's lagging so much behind that had to be caught up. But I do think fundamentally there are certain big issues that still remain unresolved. And I think as we go from pre-Series A to Series A and Series B, those fundamental issues need to be resolved. Now, these fundamental issues are not of startups, they are of Pakistan. You know, as they say, Pakistan is a country of perpetual potential. You know, there's always potential that will realize one day, but that day doesn't happen. And I think there is a risk. And that's why I think the topic should have believe the hype question mark, because of course there is a hype, but is it really going to become into realizable capital gains and returns for investors? So I think we need to be very mindful of that is certainly something. I think the local market is very different. For instance, I'm telling you, I'll share with you from last week, I have hired a CFO who's come from Australia. He's a Pakistani who's come after 19 years. And I'm a chairman of a distribution logistics company. And he basically said that he was surprised to see 70% of our volume being traded in cash. He thought it's going to be 30%. I said, look, this is Pakistani economy. Everything runs on cash. So you should not be that surprised. So when you come into the reality of the Pakistani economy, the reality is very different. And I do think hardcore operating capabilities are something which are lacking, which is in the local mindset. I have prepared 2 or 3 points on it. If you want, allow me, I can share them with you. I'm
sure.
To have a structured conversation around it. Can you see it?
Yes, we can see it now.
So, my favorite, Ray Dalio. Can you see the Ray Dalio thing?
Yeah.
Yep.
Yeah. So, Ray Dalio, always my favorite. He always says, recognize perfect conflict, but also have accurate criticism. Because I think we do talk a lot about the positive, we also have to talk about the challenges there. So, instead of celebrating how great we are, we must focus on where we need to improve. And I think that is very, very important if we have to go from pre-series to Series A and to B. Startup scene, this time, it might not be different. So lack of depth in operating and technical talent. If you are going to hire a VP of engineering for a startup that is going to be $100 million valuation startup, good luck finding it in Pakistan. It's very, where there are literally 5 or 6 people on your hands you can count on who you would hire. It's very, very challenging. We have a lot of numbers, and I always say, Pakistanis have a lot of talent. But Pakistan is a country where we have a lot of high quality up talent. The top 10% is very high. The quality is very global, and their quality is of global standard. But our average talent is very low. So we produce 80,000 computer science graduates, but beyond the top 5,000, hardly the quality is there for which you can build, a company that needs 500,000 to 3,000 computer science graduates. And I think that is going to be a big issue. The other point that I have is that the state is a big impediment, and the state is always a big impediment. It's never the case that the state is a facilitator, but in Pakistan, it drags, it competes against you, and it monopolizes. So what it does is, I have to do the job of the FBR because FBR can't do the job. So I have to withhold tax. So I have my hand, wherever I make a payment, I have to hold money for others and account for it and become literally a taxman in order to do their job, which they can't do effectively. So they have asked me, they want me to do that. And if I don't do that, I'm imposed penalties, and that's huge cost and huge drag and huge time that is spent in terms of focusing on something which I don't need to focus as a startup. The other thing is the state competes a lot with startups, and it's because the policymakers, they want social recognition, political recognition. So we had the Digital Pakistan, and what Digital Pakistan did was that instead of seeding or supporting existing healthcare, telehealth companies like Sehat Kahani and others, as it happens in China, and we know the Huawei and all these big companies grew on the back of state providing them with contracts in order for them to grow. Same thing happened in South Korea. Here, the state tries to do everything itself and tries to monopolize it. The same thing is happening in terms of insurance. So Sehat thing, where state life has been given a monopoly over everything in Punjab and KP. And as a result, other private sector startups are squeezed out of the market, both in terms of funding, but also in terms of the clients that they can, because the state, in essence, becomes a competitor. And I think it's very, very difficult to compete against the state if it's if it puts its money behind it. Yeah. The other thing is to go far, go with others. I think most of the startups, we have got a very crowded space, and at least it's early days. I hope to see that there is much more mergers and acquisitions between them, and much more collaboration in terms of getting big. I think that's the Silicon Valley style, that you don't have to do everything, you don't have to replicate everything. You can do by gaining both talent, technology, and scale by acquiring others. And certainly in this space, and I know that because I'm in the logistics and distribution. One of the things that I chair is also logistics and distribution. These businesses, and they're going very well, they've gained a lot of capital, but how many of them can go into a single Karyana store in Karachi? There are 40,000 Karyana stores, you can't have 6 of them, and eventually you'll be one. The other thing is, you need an operational backbone. And that operational backbone is the logistics and distribution. You come across very difficult operating environment whereby you may create a lot of demand, but the demand doesn't go anywhere because your logistics, your warehousing system doesn't. So Alibaba didn't grow on its own. Alibaba grew, but on the back of 3 huge logistics companies that grew with it. It was cross-investment holdings, partnership with them, with whom they grow. But if you ask these startups, they think they can do it on their own rather than partnering with others in order to do that. And so I think that kind of mindset, the growth mindset, the mindset of collaboration, the mindset of mergers coming together, people, teams, I think that is something, but I think it's early days. to do that. The last bit is the last bit that I think it's a big one is geography matters. I think we are entering into a very tricky time of Pakistan, and I think I can see the situation, particularly what's happening in Afghanistan, again bringing down Pakistan. And I think that is something that I wasn't thinking about including it, but I have really thought about it recently. And what the news is coming, what's happening on ground, and everything, it's a big question mark that can really be a drag, at least in terms of the growth of venture capital and the attraction that we so rightly mentioned, that there's always been this question mark around Pakistan, which was now we were able to overcome. But given what is happening in the neighborhood, I think that could really drag us down, and we have to be very careful and watch out for it. I think those are some of the problems. I've got other things why it will be different this time. I've got something, but I'll leave it for later.
Cool. So one thing I think you guys mentioned was the amount of capital that's been pouring into Pakistan, especially over the last, 2021 has been a great year. 100 million in investment that's been attracted by startups have attracted this year, double the amount that was done in all of 2020. But a lot of it happens to be in seed stage investments, right? And we would like to see a lot of these startups go and proceed to Series A, Series B, maybe even IPO locally rather than going on NASDAQ. What needs to happen? What kind of lessons we can learn from other regions that we can make this ecosystem a little bit stronger and more resilient?
Yeah, I mean, if I were to, I guess, give a couple of parallels, I think, one of the things we need to do is think through what those parallels are. One of them, which I'd love to introduce on this call, is probably Indonesia, right? Because in a sense, Egypt is a direct parallel, and Indonesia, I think, is another parallel, where you see exactly that evolution that you're describing of significant growth, as Ahmed described, through the enabling architecture of logistics and payments, catching up with the acceleration of e-commerce startups. And what you see alongside that is an enormous commitment of local money and a significant degree of commitment of foreign money. So you look at funds in Indonesia like SMDV, run by a guy called Roderick Perwana. Roderick's a good guy. That's Wijaja family money to a large extent, Wijaja being a large paper manufacturer and palm oil, industrial group operating across 4 verticals. Each one of their verticals is a $5 billion EBITDA business profit. I mean, we're talking gigantic commitment. We're sticking 200 million into an early stage fund for Wijaja. Frankly, Wijaja is not that big a deal. But what they've been able to do is to leverage the ecosystem and then get players like SoftBank to come into their second fund. So I think what you see, and then obviously the Chinese corridor is very critical to that story as well, which I guess fewer people talk about. Lazada came in, Alibaba invested into Lazada, and they've become a player in the ecosystem as well. So I think what you see there is, deep addressable opportunity, significant upgrade of infrastructure, tons of local talent, some of it coming back, tons of foreign capital from China and the rest of Asia and other regions, enormous commitment of local family money, and to a large extent, political stability as well. So, that would be my, Indonesian example. Egypt, somewhat similar, but Indonesia, to answer your point, is the real success story in terms of more mature capital.
And Egypt managed to do that despite the political unrest domestically, right? So the Arab Spring was in its peak at some point during this evolutionary stage that the startup ecosystem went through. So
yeah,
if they can
2010, 11, yeah, I mean, was Egypt. Mubarak obviously went out, other leaders, including now Sisi, came in, fairly big, cleanup of government by him, to be fair. A number of people we know came into that government, some very capable professionals from the private sector. But I think the real driver there seems to me to be deep addressable market and deep talent pool. Egyptians are resilient, extremely capable founders, big diaspora. A certain number of Egyptians from the wider region came back. But when you meet the Egyptians there, I mean, you take a guy like Mahmoud Ibrahim at HomeSmart. Mahmoud is extremely familiar with Pakistan because he was a co-founder at Daraz through the Jumia and Rocket system. So he's a big fan of Pakistan and went back from the Rocket system and then did stuff in Egypt. And most of them are university educated from abroad and then came back to Egypt, family connections and so on. But the Egyptian story, I think, is one of incredibly powerful entrepreneurial drive.
And Ahmed, what responsibility do we as investors or shareholders have in kind of guiding these startups? You know, they've raised Series A or seed or Series A at the moment. There's so many of them. You talked a little bit about having the M&A mindset, or the founders being open to the M&A mindset. How can we encourage that? Because not everybody, you know, we can't have 200 digital banks trying to chase 5,000 people. I'm just making these numbers up, right? How can we as shareholders encourage these founders to think about that? Because they have either the option of consolidating through mergers or being outgrown by their competitors, and then they are left with nothing in their pockets.
So I think there are many roles. Then at least foreign investors or people who have the VC mindset and have done it in other parts of Pakistan can do it. First of all, a lot of times the local investors, the local family groups who invest, have a huge stranglehold over the businesses. And they want to be founders of these businesses whilst being on the board. And the kind of entrepreneurial spirit of the founder is kind of constrained as a result of that. And because they have the money and they're the first people to write the checks. And I do know that some of the big investors that came in later rounds kind of reversed those things. They got the founders because they got diluted much more at the earlier stage. They got them more equity, so that they were more, they had more skin in the game. So first of all, I think there's a very important role for international venture capital in trying to both educate local investors, forget about founders, but also local investors, and also to balance some of the power dynamics that exist on the board. And I think that is very, very important because a lot of the investors come from large family groups of controlled majority stakes, whereby your accountant is your cousin and everything across the board is family and family dominated, family control, and that's not how startups or venture works. It has to be a meritocracy and talent based. So I think that bit, being on the board and trying to balance that power, is number one thing. So that's the first thing, the service that can be done. The other one is to also rein in the entrepreneurs and to make them a bit more KPI driven, get more milestone driven, and more focused. I do think that I'm Pakistani and I'm not I can have lots of ideas. And you can end up, and Pakistan is a big market, with a lot of opportunities, and you can go in different directions. But I do think that the level of discipline and focus is not the forte for us. We love Shahid Afridi, but we dislike Misbah al-Haq. Although Misbah al-Haq on track record is much, much better player than Shahid Afridi is, but we love the floppy hair and the flamboyance and the last ball sixes from the Shahid Afridi, although he only fires 1 time out of 10. But that's the nation. So that discipline, that focus on strategy, and that mindset, that focus on defining the product market mix fit is very critical for the investors. So that's the second thing that they can do, is try to rein them in a certain direction and to make sure that they're questioning the product market fit all the time. The third time is to tell them when it's over, or to tell them when, hey, you need some help to get to the next level. Because guess what? It's always, I remember somewhere we were there, he said there's no such thing as a perfect CEO. There may be a perfect CEO for the next 18 months. So if you're doing your job very well, you might be out of a job in 18 months. It's simple as that. You're growing so fast, you go to the next stage. And somehow as founders, we do tend to feel that we are the best ones to take it forward. We might be the case, but at some stage, somebody else has to come in and to take it to the next level, or we have to merge with another entity because otherwise the business model might not be viable. That kind of communication is not going to happen at the management level. That doesn't happen. That's not the culture. And I think that's the third thing that the board has an immense responsibility to tell the founder that, look, you'll make the money, you'll be involved in all of these things, but it's time to bring in a CEO, or it's time to merge with another entity as a result that the business can continue and function better. So I do think that these are three, and all of them are, as you know, highly operating kind of in the realm of operations and management. And I think that's where international investors can help founders and.
Omar, so you're sitting right next to a lot of these startups, right? Do you see any particular sector which is already overheated, right? Maybe there are too many fintechs and not enough agri-techs, or maybe there are too many solar techs and not enough, I don't know, health tech companies. Do you see where for the stage Pakistani startup ecosystem is at, they're too much concentration in one area and not enough in the other?
Yeah, so I mean, just to add to what Ahmed and Ovais added as well, before I answer the second question, so there are certain spaces that are overcrowded. There is also a differentiation, and also what the Pakistan ecosystem a year and a half ago, there were quite a few startups raising capital, a few investors, so they were sort of fighting across if they were good enough or not. Today, you have investors fighting to get allocation inside startups. And I get a call quite a few times sometimes, like, okay, we want an allocation in this and this, not getting an allocation. And I mean, one sector I see is sort of a fintech, because they all talk about the unbanked population of Pakistan and Easy Paisa and also of these fintechs coming out over here. I mean, they've all are actively or have raised sort of the Series A. But the question to everyone is sort of, will they be able to get to the Series B and to the Series C? Because fintech is sort of such a large sort of vertical where you have sort of the back end B2B, then you have sort of the B2C, then you have the front end as well. So there are certain sectors that are crowded, but I think what is very interesting also is to add on is that they will need to be sort of acquisitions across the board of similar sectors, larger companies taking on smaller ones, larger international players wanting to come into the market and see what is going on. And so today, logistics is very hot, quite large. Everyone is sort of doing some sort of angle of logistics. Fintech is the same. There's one of our ex-colleagues actually, he opened an agri-tech in India called, he's 27. He just raised a Series A at $38 million. His name is Arjun, used to be our junior at Abraaj. And the idea is he does agri-tech. Today, I do not see Pakistan doing as much agri-tech as much as sort of the sector we see today. And there are also sort of other sort of opportunities today. Health tech as well is, in my opinion, has a few sort of players doing different verticals, but it has a lot of space for people to come in and go from there. But I think the most important thing to realize today is that, okay, fine, it's great to get money into the Series A. You're showing future numbers. You are all talking about the 220 million people, the 27 million age, the illiteracy, the unbanked population. But will you be able to sort of raise from the Series B and go further? Because in the Middle East as well, there are lots of examples like sort of Fetcher, AWOC, companies that raised excess amounts of capital over the years, but were not able to execute. And the difference, in my opinion, today is sort of, when I sort of look at it as an investor as well, because I worked in sort of PE, we go into diligence to every detail. We overanalyze. VC is very much up in the air. It is post numbers. And when I look at them as well, sometimes when I look at VC valuations in Pakistan, I just I'm not able to sort of justify them. But I mean, they are looking at sort of the bigger picture. And at times you're able to sort of just be like, okay, fine. I mean, but I will actually, my prediction is the next sort of 18, 20 months, you will see, I mean, some stars come out of this. Some companies go the big way, so the way Careem came out, but you will also see some companies burning or not be able to sort of execute past sort of the Series A because either they raised too much capital or they sort of promised too much And the same thing, Pakistan's resources are also limited, right? Unless you have $100 million company, only then can you hire a $500,000 a year CTO, right? Otherwise, I mean, it is limited as well in terms of bringing talent back into the country.
Yeah, I think I can pick up on one of Omar's points. I mean, I think, the overheating risk is there in the MENA region, absolutely there, because if you look at Saudi Arabia, capital going in, and frankly, first-time funds being funded to invest. I mean, you've got founders of funds who've never done management before, but they're being invested in by local entities in Saudi. And if you look at globally at the success and failure level, even at Series, broadly speaking, 80% of Series A companies will go by the wayside, broadly speaking, never mind the earlier stages. So, what we have to be prepared for is two aspects of risk in Pakistan. One is the executional risk of businesses just simply not being able to get there because either the investment thesis was flawed or competition became too intense for them to survive, or they couldn't raise subsequent larger rounds. That's one risk. And the other risk is obviously the macro that Ahmed was alluding to as well around Afghanistan, which I would similarly mirror as a decently sized potential risk to regional economic stability in that sub-region of Pakistan and slightly wider. So, I think we need to be mindful of that, even in the MENA region, because the kind of experiences that ecosystems have center around cycles of success and failure that eventually result in 2 or 3 cycles before you end up with a very stable ecosystem. I think the same thing is going to happen in Pakistan. It doesn't take one cycle of investing to achieve IPOs and success. It seems like it when you look at Careem, and it seems like it when you look at Noon and so forth. But I think the dynamics there are very, very different and relatively kind of not necessarily structural. A bit of good fortune in some of those stories. So, we all need to kind of hold our horses a little bit insofar as be ready for ecosystems evolving through a cycle of success and failure.
You'd mentioned earlier Uber and Careem, right? I mean, those two companies are giants in the same kind of service that they're providing, and as a result, one ended up acquiring the other. And I think that's a message that founders need to understand as well. That you can be a huge success, but not they can always be somebody bigger who can acquire you, and it's better for the end consumer at the end.
Even in the MENA region, I mean, we had another colleague who started a business called Spotty, which was in the instant loan space at point of purchase. And she sold out to an Australian strategic pretty much within 18 months of starting. That's not a bad thing to do. I mean, if you feel competition's intense and you've got extremely well-funded competition like Tabby, founded by Hussam Arab, which has just raised 50 million in a combination of equity and debt facility, having raised a 20 million seed round, never mind a Series A. I mean, why not just go, what, there's an Australian strategic, we built a product, they want a bridgehead into the MENA region, what, sell it.
Yeah, and rather have an exit where you're getting some money back rather than go bust without having any customers.
Right, absolutely.
So when do you think Ovais
is key, right?
Yep. True. Ovais, how long do you think we are, or how far do we think we are from local startups taking the IPO route, or even a SPAC route these days, whether in Pakistan or abroad?
I mean, the SPAC route is an option. I mean, I saw a Jefferies report the other day of SPACs looking for investments, and it was about as thick as an encyclopedia. They're obviously super keen. Lots of SPACs are looking for lots of opportunities, but the characteristics of those companies, to some extent, has yet to be achieved in Pakistan, because you've got to be at least at a kind of Series B, Series C level. I mean, I'm a board member of a company called Modernista, which is a fashion e-commerce player in Turkey. $250 million gross revenues, EBITDA positive. I mean, that's the kind of business that's probably a SPAC business. And I don't quite see that yet in Pakistan. So when we talk IPO, SPAC, etc., from what I can see of even the scale players, you've got companies like Bazaar and Daja and so on starting to reach a decent level of traction, but the GMV numbers and the net revenue numbers are still relatively small. So I think we're still, and even when you look at e-commerce, I don't know Daraz's numbers, and it would be presumptuous to suggest them, but you're still looking at businesses that are not quite there in terms of scale, even by MENA standards, never mind global.
Do any of you have any numbers in terms of startup M&As, transactions that might have happened in the last couple of years in Pakistan? I'm not familiar with any, right? Especially because so many startups are still at, at the Series A or even seed stage. I've not seen that many already merging with each other.
Not yet. I mean, you don't even see the phenomenon. I think even in MENA, you don't see that much. It's still relatively rare. And obviously, when you're product oriented, the nature of combining two different products is not simple. So it doesn't always work necessarily, even in most tech and product oriented businesses. You've got to have a very clear complementary set of synergies that are not just geographic. The overlaps have got. So the approach is complex.
Yeah, I think, Ahmed, you mentioned that Careem acquired a couple of logistics companies.
Yes, I remember there was this startup in Lahore with a founder. Her name was Madiha, but I don't remember the name of the company. But what I was told is it was more to do with acquiring the talent, the founder. They wanted to get the founder and they bought the company as a result of it. I think Careem in the original days, Junaid Iqbal did acquire a couple of small companies and brought them on board. What was the motive of it? Whether it was just talent acquisition or actually getting scale, that I'm not too sure about. But I do remember definitely one in Lahore, which was in similar space, Mobili or something like that, that Careem acquired. This was about 2015, 16, around about that time.
I think actually,
Savari, I mentioned is that Savari. Yes, somebody mentioned Savari, of course, for talent. That's right.
Yeah, but I think the Careem mergers, I agree with Ahmed, would, even Abdullah Ilyas's business in Saudi Arabia was originally acquired to a large extent, frankly, to acquire Abdullah, who then became co-founder of Careem. Same thing in Pakistan. And there were a couple of wider acquisitions, including a restaurant booking business, I think, for OpenTable in North Africa. But generally speaking, it was a form of talent acquisition. Yeah.
I think acqui-hire is a common phenomenon at such an early stage of a business, rather than acquiring the business itself. So we've got another question from Hassan Basharat on whether you guys are familiar with any Proptech or any traction on Proptech in Pakistan.
I mean, I can answer that. I mean, I've looked at Proptech a lot in the MENA region and Latin America emerging markets. Very few companies are of scale doing Proptech. Co-working is real estate. It is not Proptech. Co-working is optimized real estate. They use tech to enable real estate. Your cloud kitchens, dark kitchens, I mean, you could sort of put them under sort of Proptech as well, along with sort of logistics. Other than that, I mean, nothing big that comes to mind. There are a few companies that are sort of doing Proptech-based SaaS-based softwares, but nothing of scale. The companies in Beirut, Antwerp, where MEVP is an investor, they call themselves Proptech because they actually come in, they sort of install sort of all the softwares, sort of do the 3D mapping, and then from the back of that, they sort of say that we can optimize your real estate to this level. So in that sense, I mean, there are quite a few companies doing it, but none of scale today.
I think a couple of days ago, DAO Proptech landed on my desk. They're doing tokenized real estate investments at the moment. I think they're based in Islamabad, but I think it's an emerging area. Unless you guys.
And just to answer Ali right now, Garana or Zameen are classifieds. They are not Proptech because they're essentially sort of doing the same thing Dubizzle does, or sort of other companies sort of in the Middle East, and what Naspers invests in today as well. Rumi and Gharper are sort of co-live and sort of in terms of what they're sort of bringing out there in that sense. MyGhar, Rumi, both sort of co-living, similar to a company in Latin America called Selena, where sort of we work with an investor Abraaj was also invested today through Colony. One of our colleagues, Eduardo Cortina, sits on the board. Selena today is like a $6 billion company. It's raised about 892 million, but they basically are more focused on co-living all around Latin America, then into Asia and all of that, similar to sort of what Droomy does today.
Okay, we have a question from Faisal, quite interesting on EdTech. Is there something that about EdTech which makes investors run away?
I mean, I've seen a few EdTech that are not, it's
not really.
I mean, there are different areas of the EdTech vertical. You know, there's enterprise solutions for schools, there's teacher performance optimization, there's classroom educational tools. I mean, there are different areas of the stack, and some of them lend themselves to potential venture opportunities, some of them don't. Enterprise solutions come with the classic challenges around schools acquisition and, you know, acquiring customers with all of the challenges around that. So I think it depends on which segment of the EdTech stack you're talking about.
I personally feel that there are quite a few EdTechs now. There's Noon, which is coming from the Middle East into Pakistan. There's Nearpeer, which is homegrown. There's Taleemabad, which is partnering with the government to make education available to people who would otherwise not have. But I don't know if there's investor focus on them. Maybe this is family money, which is
knowledge platform.
Mm-hmm.
Knowledge platform raised capital. Laxon, in the Pakistan entity, knowledge platform based out of Singapore has raised more institutional capital. So I mean, there are sort of EdTechs coming up slowly as you sort of get there. I think what's very thing to focus on is sort of the quality of the content coming out there and the adoption of Pakistanis. Because if you look at Baiju in India, I mean, that's sort of the multi-billion-dollar EdTech over there. So there are quite a few people over here. I mean, there's one doing a seed round right now. Called Senpai. That came on my desk a few months ago. That they're interesting more on 8th, 9th, 10th grade learning. That's something interesting as well. I saw.
Fantastic. So just having a look at the time, we are coming to the end of our fireside chat. So any last comments from each one of you, and then we'll close the call after that.
I mean, I guess from my perspective, I think it's, you know, it's obviously very encouraging that Pakistan is getting to where it is. I think inevitably there'll be teething pains, but what I'm starting to see, which is incredibly exciting, is Middle Eastern investors in the GCC where I am, you know, seeing the holistic picture of a MENA Pakistan addressable market. When you add together the population of MENA and Pakistan, you're talking about a roughly 800 million population. And the more that we can do to build those corridors from the perspective of giving Pakistani companies access to the Middle Eastern opportunity, that's extremely exciting for me personally, which is what can we do as investors to facilitate the corridors between Karachi and Riyadh and Islamabad and Dubai and Cairo and, you know, Lahore, for example. I think the more that we can do to give Pakistani opportunities or businesses a chance to address a bigger market and to mitigate the perceived Pakistani risk with a picture which is much bigger, just the fact that you're a MENA Pakistan company rather than just a Pakistani company or a Saudi company gives you a way bigger defensibility around risk mitigation and eventual path to IPO and exit.
Yeah, I think what I'll add to that is the MENA Pakistan connection. I think the biggest thing and the most positive thing that has happened, and in MENA or at least in Pakistan, is the Careem story. And I think we will, over a period of time, come to realize that Careem seeded more than a $2.3 billion exit. It probably seeded something called a Careem Mafia, which would be, I would hope, like the PayPal Mafia, would have seeded a lot of companies out there. So the Bazaar team, the Swivel team, there are at least 5 or 6 startups where literally chunks of Careem team have gone out, sat there, and what they have is a huge amount of operating expertise, of scaling, of building businesses. And I think that's a very positive thing. And I think that will plug the gap. I think I've said 5 ministries of government of Pakistan and 50 summaries could not have done the good job or the great work or the support that Careem has done for supporting on innovation entrepreneurship in Pakistan. So I think the Careem story, if it can be replicated a couple of times with seeding of these operators, founders across the board, would be a positive thing. The other thing Careem has done, it has made a lot of people a lot of money, and the people who have made a lot of money who are working there, and they have formed syndicates and syndicates of investors, and those syndicates of investors are good investors for these startups across the region and in Pakistan. So I do think that the Oasis hypothesis of MENA Pakistan connectivity plays out very well in the Careem story, but it's also Careem is a Pakistan and Middle East story. But I do think that the Careem success, the Careem Mafia, as they go on and see the next generation of startups, is a positive thing. And then that's something to bank on. One cannot bank on the government to do the right thing because they always have other compulsions. But I think one should bank on the right people in the right place doing the right job, which is, I think, the Careem founding team and all the people, the talent that they create underneath them.
And Omar, before we lose you, I think you're in pitch darkness now. Any final comments from your side?
Yeah. So just to sort of close off from my side, in my opinion, if I look at Pakistan in the last sort of 10 years, 2013, 12, it was only the DFIs investing here, which was the IFCs, the World Banks, Asian Development Banks. What I've really seen, and I've really seen sort of come out from here, is that in the last sort of 5 or 6 years, first you had the Middle Eastern investors put in capital. Today, you have all global investors such as sort of Klein & Perkins, investors from Australia, from Europe, all of them looking actively at sort of Pakistani startups and looking at sort of the 220 million. So what's very, very important to add on to sort of Ahmed and Ovais's points as well is that Pakistan is going places and the world is watching. So for us, I think the point is that it's a very good sort of very good for the country, and the same point that the government was unable to do it. Just sort of from what you look at it as a Careem exit, you will see much other companies today trying to sort of raise capital and come up from there. So as you see over there as well, that is something that we will see coming out of here.
Thank you. I think it's a very encouraging picture that you guys painted, and the comments and the feedback that you guys have provided. So Park Launch is also organizing an event coming up in September where we're bringing investors and startups together in September. We've got partners coming from Klein & Perkins and other Bay Area as well as European investors joining the event. So everybody on the call, I highly encourage you that you sign up. You'll find more details on that on the Park Launch website. Thank you, gentlemen. It was a pleasure having you on the call. I wish you the best of luck in what you're trying to achieve and what you're trying to encourage in the Pakistani as well as in the MENA ecosystem, startup ecosystem. It takes a village to start a company, and it takes a country to make a successful company. And I hope we see some unicorns coming out of these regions, or more unicorns coming out of these regions in the next few years. This region is one of the most densely populated regions in the world. I think it's a matter of time where somebody's going to come up with the next Apple or Microsoft from these regions. We all already see the talent working in those big, trillion-dollar companies. I think it's time that they're thinking of bringing that talent back home as well.
Thank you.
So thank you, gentlemen. And with that, we will close our call. Thank you for dialing in, and wish you a great afternoon or evening or morning, wherever you are. Thank you.
Thank you very much. Thank you.